I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Here's a check of your first word news. President Trump is in California inspecting prototypes for his proposed border wall. The president asked which prototype was the hardest to climb. He also said parts of California could use a wall to break the flow of illegal immigration. Secretary of State Rex Tillerson is delegating his responsibilities after the workday to Deputy John Sullivan. Tillerson was fired today by President Trump.
I'll now return to private life as a private citizen, as a proud American, proud of the opportunity I've had to serve my country.
President Trump is nominating CIA Director Mike Pompeo to replace Tillerson. Pompeo is a former member of Congress. Meantime, Deputy CIA Director Gina Haspel will succeed Pompeo. The career spy master will be the first woman to lead the agency. Florida prosecutors say they will seek the death penalty against Nicholas Cruz for the mass shooting at Marjorie Stoneman Douglas High School. The 19-year-old will be arraigned tomorrow. And in Pennsylvania, Republican congressional candidate Rick Saccone is in a tight race against Democrat Connor Lamb for the House seat vacated by former Congressman Tim Murphy. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg, and Bloomberg Technology is next.
And this is Bloomberg Technology. Coming up, the Broadcom bombshell, how the fight to close the biggest deal in tech history went all the way to the White House, and why it failed. Plus, Tillerson is out at the State Department, and tech loses a strong advocate for diplomacy. What today's surprise firing means for the intellectual property fight between Beijing and Washington. And GM taps the gig economy. Details on the company's new pilot program that allows owners to rent out their cars. But first, to our lead. It was supposed to be the largest tech deal ever, but now it is dead. Broadcom's $117 billion hostile takeover of rival chipmaker Qualcomm has been blocked by President Trump, citing concerns over national security, saying there is credible evidence that leads me to believe that Broadcom, by acquiring Qualcomm, might take action that threatens to impair the national security of the United States. So what happens now? To answer that, I want to bring back who else but Bloomberg's Ian King, who's been following this deal day by day for months. And in New York, we have Bloomberg Gadfly columnist Brooke Sutherland, who covers industrial companies. So Ian, just how sudden and unusual is this?
Well, you remember we were talking yesterday, we were talking about how it might drag on. A lot of that was based upon the fact that Hock Tan, the CEO of Broadcom, was actually in the Pentagon yesterday afternoon trying to explain himself, trying to find a way forward. A matter of hours later, the White House comes out and says, no, you don't. That's the end of it.
So very unexpected, right?
We expected it to go further, certainly.
So, Brooke, what kind of implications will this have more broadly on M&A? Let's start with tech and the tech industry.
Sure. I mean, I think the clear signal that the government is sending is that U.S. tech is off limits to foreign buyers. This is actually not the first deal that's been blocked under President Trump's administration because of national security concerns. If you remember, Canyon Bridge Capital was trying to buy Lattice Semiconductor. That got blocked by Trump. But I think the other more broader implication of this is that it's not necessarily China that's the problem here. I mean, at the end of the day, Broadcom's nationality played sort of a minor role in CFIUS's concerns with this deal. Their primary pushback was what type of company Broadcom is. They were worried that Broadcom would use cost cuts and gut Qualcomm's R&D, and that would sort of hamstring the company's ability to compete in the race for 5G. And that has much broader implications on M&A because that's what companies do when they do large M&A. They cut costs, they make divestitures, they try to make these deals accretive. So if that's now off the table and being considered as a national security risk, there's a ton of companies that maybe were looking at deals and will have to sort of hit the pause button while their advisors try to figure out what's going on here.
Ian, is there any way forward for Broadcom's bid, or is this definitely dead?
Yeah, I mean, we have to note that they haven't formally given up yet. We believe meetings are underway. They're considering what they might do, but they're
meetings with who?
Meetings between themselves while they decide what it is they're going to do. But really, the only way forward for them would be to launch a legal challenge to this. But even then, according to what we've been told, the most they would get would be an explanation of why.
Okay. And what is the explanation of why?
That is really a matter of conjecture. I mean, the thing about CFIUS is it doesn't have to explain itself. It just says security concerns, that's the end of it. But a bit more broadly than that, as Brooke said, they did say, look, we don't like the fact that we believe you don't invest in technology. That's a security concern. So apparently the definition of what is a concern has spread.
So, Brooke, I mean, this administration has sent up red flags about non-foreign takeovers. You know, we're dealing with that with AT&T, Time Warner. You know, talk about just, you know, what this means for M&A in general.
Sure. I mean, I think the signal that's being sent is that this administration is going to take a much tougher look at all types of M&A, which is not necessarily what we expected going in. Trump, you know, pitches himself as this great deal maker, and yet he's pushing back very aggressively against deals. You know, I think the interesting thing with Time Warner and AT&T is that it's a vertical integration deal. The two companies don't necessarily have a lot of overlap. Historically, the U.S. hasn't looked at that on an antitrust basis. They've only looked at specific businesses where there's distinct overlap, and it seems to be an attempt to sort of shift the purview to look at vertical integration in the same way that European and Chinese regulators do. And then again, you know, we have this expanding definition of what is a national security concern, and I think you're only going to see that expand further. There's legislation in front of Congress right now that would allow CFIUS to take a look at joint ventures, minority investments, real estate transactions, and to further define what a national security issue is, to include technology and all sorts of other issues.
Ian, Qualcomm shares dropped on this news. Broadcom shares only slightly down. Are, you know, executives at Qualcomm in San Diego celebrating, or, you know, they still have a lot to figure out?
Yeah, I mean, you're absolutely right. This is by no means a victory parade for them. Effectively, they won by default. Their competitor was disqualified. They did not convince their shareholders to vote this down. Indeed, going into that shareholders meeting, which was cancelled at the last minute, they were losing, and it was looking like that board was going to be largely taken over by Broadcom. So really, that was a vote of no confidence for their management, and this is something that they're going to have to address pretty quickly.
So what are next steps for Qualcomm?
For Qualcomm, they need to get the Apple situation sorted out. You'll remember, Emily, we've been talking about this for more than a year now. They're in a massive legal dispute with one of their biggest customers, saying, we don't want to pay you for technology licensing anymore. That technology licensing revenue is a massive importance for them, very high margins, and that pays for all their R&D. They need to get that back to get shareholders back on side.
Brooke, talk to us a little bit more about the broader markets and how, you know, they might react to, you know, this bigger idea that this administration is not going to be friendly to M&A of many kinds.
Sure. I mean, I think one big open question out there is Qualcomm's acquisition of NXP. We're still waiting for regulatory sign-off from China for that deal. It's been more than 15 months at this point. There was some speculation among analysts whether China was purposely dragging its feet as a sort of retribution for Trump because of the steel and aluminum tariffs. And now I think this just only feeds the fire. And so it'll be interesting to see what happens with that. There was also some questions about the Cavium Marvell deal. Could that deal now run into CFIUS pushback, given the fact that one of these companies is based in Bermuda? Is that now considered a national security risk? I mean, it just really opens the floodgates for all of these questions and different dynamics that advisors, when they put these deals together, never previously had to consider.
So Broadcom executives are meeting amongst themselves. What is next for them? Should they decide not to move this forward?
Yeah, I mean, the point that Brooke made, I think, is a very important one. Broadcom is an American company, according to them. They were just registered in Singapore for tax purposes. They come out of a HP spin-off. They bought companies that are all American. Broadcom itself, which they acquired just in the last 2 years, is an American company. Hock Tan, he's got a Chinese name. He's a Malaysian-born person, but he's been a citizen of the US for 28 years. He's had top security clearance. Calling them a foreign entity is kind of a stretch, at least in their opinion, and at least according to all the arguments they've made. So the concern here is then, if their policy is to buy new companies and to grow through that mechanism, are they going to be allowed to do anything?
And do you think that they'll appeal?
I have no strong sense one way or the other at the moment. It's been a really difficult race to to predict both ways all along.
So you still can't take a day off. Is that the bottom line?
That's the bottom line.
You're watching hourly. Okay, Ian King, our Bloomberg chip reporter, thank you. Brooke Sutherland of Bloomberg Gadfly, thank you as well. Well, after years of focusing on large customers, Salesforce is doubling down on its small business space. The cloud-based software provider is rolling out a new product package called Essentials that'll help manage client relationships. Small businesses currently make up a third of Salesforce's customer base. The shift comes as Salesforce has edged out competitors like Oracle and SAP in recent years. But those large-scale clients are expensive to pursue and maintain, unlike smaller enterprises. Coming up, we discuss the surprise shakeup in Washington. President Trump taps new names to run the State Department, and the CIA will break it all down next. This is Bloomberg. Well, Apple could be the first company in world history to hit the $1 trillion valuation mark. The market cap of the world's most valuable company is at an all-time high of more than $922 billion, in spite of a lackluster earnings report last month. Apple had shipped fewer iPhones than expected. The stock is up about 40% since that report and hovering at a new record high. A huge shakeup today in the heart of the Trump administration. Rex Tillerson is out, and CIA Director Mike Pompeo is on his way in as Secretary of State. President Trump fired the former Exxon CEO, saying he and Tillerson didn't agree on the Iran nuclear deal. Gina Haspel will succeed Pompeo at the CIA, becoming the first woman to head the agency. Here is what Trump had to say about Tillerson's successor earlier today.
Sometimes tremendous energy, tremendous intellect. We're always on the same wavelength. The relationship has been very good, and that's what I need as Secretary of State.
For more reaction, I want to get to Washington, where Jamil Jaffer is standing by. He is the founder of the National Security Institute at George Mason University and former chief counsel and senior advisor to Senate Foreign Relations Committee. So, Jamil, we're going to talk about what this means for business. But first, what's your reaction here?
Well, look, I mean, obviously the president and Rex Tillerson didn't get along. At least they didn't see eye to eye on international relations and more importantly on the Iran deal. So at the end of the day, the president needs somebody in there that he can rely upon. And frankly, for the Secretary of State, they have to be able to represent the U.S. to the world and be able to show that they have the president's backing. And so Mike Pompeo has had a great relationship with the president's CIA. Looks like he'll have that going forward as Secretary of State.
Now, earlier this month, former CIA Director John Brennan tweeted this about President Trump. He said, "You show an amazing, albeit unsurprising, ignorance of how technology, automation, and the attendant evolution of economics and societies have transformed the world. Your simple-minded policies, imposition of tariffs, have the potential to seriously damage our future prosperity." You know, obviously, we don't know how Mike Pompeo is going to lead, but what does Rex Tillerson being out? This is someone who supported foreign diplomacy. You know, what does this mean for a change in policy and an impact on businesses?
Well, look, I mean, I think that Mike Pompeo obviously understands technology well. He served on the House Intelligence Committee, where he was a leading voice supporting the Cyber Information Sharing Act, which created that sharing of information between the public and private sectors. There's more to be done there for sure, but Pompeo understands technology, and he's a smart guy. So I think he'll be a positive trend in that direction. Look, the Brennan quote, I mean, you know, it's unfortunate the politics that have taken place here with a lot of sort of partisan back and forth between former CIA directors and the president. You know, this is what it is, but I don't think it's about technology, to be honest with you. I think that the White House has got a number of folks who really understand technology. Rob Joyce, a number of other folks, Kirsten Nielsen at DHS, Chris Krebs, who's been nominated Undersecretary of State for Cyber. So there are a lot of people in the administration who understand cyber. Pompeo is one of them and gets it, and he's going to do a good job at State.
Does President Trump, though, understand it, and does that matter?
Well, look, I mean, President Trump has been the CEO of a big company. I mean, obviously in the property space. So I don't know what the president's knowledge of cyber is. He's obviously hired people who get the issues and understand technology. So, and, you know, I mean, the man uses modern technology in a pretty aggressive way. So you got that going for him. So
then, you know, how do you think the relationship between Silicon Valley and Washington will evolve as a result of this? I mean, you know, we've been reporting that relationship has basically been on pause since President Trump was in the administration. We've seen tech executives going to meet with him in Washington, but not a lot of engagement otherwise.
Well, look, I think there's a real challenge here. We've had a challenge since the Snowden revelations about technology and its relationship with Washington, D.C. I think it's really important that we rebuild that relationship, because at the end of the day, I think what the technology community has to realize is they are on the verge of regulation. There are people like Elizabeth Warren in Congress talking about regulating major companies like Bloomberg, like Google and Facebook. And that's a real problem, because the best part of our economy, the engine of our economy, is modern technology, and the idea that Washington knows best is just wrong. And so I think that they have an opportunity with the administration to work and move towards a cooperative relationship. And I really think that the Valley ought to take advantage of that opportunity here.
So, what about the broader signal that this sends about foreign diplomacy to the world? And, how will this affect the United States' relationships with other countries, this change in power?
Well, look, I think in one way it's going to be really helpful, which is to say that now you'll have a Secretary of State that has the backing of the president, that the president sees eye to eye with, and can really say, look, I am representing the United States here. Now, you can say whoever you want to blame the situation that was with Rex Tillerson, where it didn't look like he was effectively representing the president, and whether that blame goes on Tillerson or the president. At the end of the day, the president was the person elected, and so you want to have the Secretary of State and the president on the same page. I think you'll see more of that with Pompeo here, and that's a good thing for American international relations going forward.
We've heard a lot about the turnover in this administration, and here we have even more. I mean, are you optimistic that, the next year will be slower on that front? Now that the president has made at least this one dramatic change?
Well, one can only hope that it becomes less sort of traumatic. I mean, we've seen just a tremendous turnover at the White House, a tremendous turnover throughout the administration. That is not good for diplomacy. It's not good for foreign policy. So hopefully this is the last of the big changes, and we'll have a steady pace going forward. And at the end of the day, what you really want is stability, both in leadership and in policy, and hopefully we'll see that going forward. We have seen some decent stability over at the Defense Department. Hopefully we'll see that here at State now going forward.
All right, Jamil Jaffer, George Mason University. Jamil, as always, great to have you on the show.
Thanks for having me, Emily.
Coming up, while Blue Apron continues to tumble after its IPO, one European meal kit startup is looking to expand. We'll talk to the CEO of Gusto next. This is Bloomberg. European meal kit startup Gusto has just sealed almost $40 million in new funding to expand across the UK. But with U.S. startup Blue Apron trading at all-time lows since going public, how does Gusto plan to stay fresh? Let's bring in Bloomberg's Caroline Hyde, who is standing by in London with Gusto CEO Timo Bolt. Caroline?
Emily, thank you very much. And let's get straight in it with Timo, because we heard it. Blue Apron, which is, of course, a US competitor, but you're in the same bracket, trading all-time lows. There is concern about this area of the market. Yet here we come, $40 million, £28.5 million. How easy a sell was it to the VCs and the wealth managers?
Fantastic. It has actually been oversubscribed as a funding round. We had a very positive reception. And what's really important is there are 1 billion meals eaten in the UK alone, and 70% are home cooked. So this is an absolutely enormous opportunity. We have built the best value proposition from meal choice to price point to delivery options, and therefore we have an amazing customer loyalty, and we managed to oversubscribe the round.
So you're looking purely at the UK, but there is hot competition here. You've got HelloFresh, which has a footprint in the US and Germany, but it's here in the UK. And I just looked online, and we've now got Able & Cole, Riverford, Snap, Gourmeo, Mindful Chef. I know not all of them have your scale, but they have your desires. How do you fend off the competition?
So I have a vision for the next 10 years, and I fundamentally believe there are huge seismic shifts in consumer behaviors. So we're building AI and automation and technology capabilities to capitalize upon those shifts in consumer preferences. So we're taking a very long time horizon, Whereas I think a lot of the smaller players, are being very opportunistic and aren't building capabilities.
And so is the market therefore going to just come in between you and HelloFresh? What about Amazon getting in?
What's really important is we obsess about you as a customer cooking dinner, and we want to make your life better, easier, and a bit more healthy. Amazon, we're talking apples and pears. Amazon is for everyone at the lowest price point, selling the most items. It's a completely different league. It's a retailer. What we do is, we deeply personalize the offering. We sell 29 meals on a weekly basis. We have automated factory capabilities and so on. So it's hugely differentiated from a value proposition point. So I'm feeling quite good.
So talk to me about how you win me hearts, minds, loyalty with automation and AI. What, in terms of artificial intelligence, is being developed by you right now to make it a better proposition?
So Gusto offers by far the most choice in the market globally. This means not only it's fantastic for you as a customer, but it means I see what you look at, I see what you choose, I see what you buy, and then 30% of customers are rating on a weekly basis, which gives me a huge richness of information, more data than any other company in this market has, which then means I can really make sure that I write trends earlier than anyone else, that I really give you exactly what you want. We use AI to personalize the offering so that we surface.
Not doing this?
No.
And so when you're hiring, because you're going to be, what, doubling your headcount? You've got 371 employees at the moment, all in the UK.
Yes.
How many of them are going to be engineers?
A big chunk. We're doubling our tech team in the next 6 to 8 months, so faster than the overall company. But what's really important is, whilst we employ machine learning PhDs and math grads and so on, I deeply believe that data science will power every single part of our business. So it's deeply integrated into all functions. We empower people, giving them access to data. It's not just a few specialists.
You've raised more than £50 million overall. Is that enough? Are you going to have to go for another round soon? Because this is a hungry, pardon the pun, deep-pocketed kind of an industry.
Yes. I could be profitable today. However, if you look at this opportunity, right, 10 years shift in the market, 1% of the 1 billion meals eaten on a weekly basis means you build a 5 billion revenue business just in the UK. So I'm feeling quite good about the amount we raised. It will allow us to get profitable and beyond, and to just build an outstanding customer proposition and widen the moat around the castle to differentiate further.
We'll see that castle as it grows. Timo Bolt, great to have you here. Thank you so much for spending time with us in London. Emily, to you in the studio.
Thank you, Caroline Hyde in London. All right, coming up, it was just months ago that Broadcom CEO Hock Tan and President Trump were chummy at the White House, but things have changed. What is next for the chipmaker's relationship with Washington? Next, this is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Here's a check of your first word news. Senate Foreign Relations Committee Chairman Bob Corker says he was surprised by President Trump's decision to fire Secretary of State Rex Tillerson. Senator Corker says he's already spoken to CIA Director Mike Pompeo, the president's nominee to replace Tillerson.
Pompeo called and I think he's excited about his new role and his designation, and I told him we would move through the confirmation process as quickly as we could.
European Commission President Jean-Claude Juncker is demanding more clarity on Brexit from British Prime Minister Theresa May. Juncker told the European Parliament it's time to turn speeches into treaties. Earlier this month, May outlined her vision for life after the UK leaves the EU. The Russian Foreign Ministry says it handed the British ambassador a note of protest as the fallout continues over the poisoning of an ex-Russian spy on British soil. Sergei Skripal and his daughter Yulia remain hospitalized in critical condition after being exposed to a military-grade nerve agent the UK says was manufactured in Moscow. Defense Secretary Jim Mattis is in Afghanistan, where he met with Afghan President Ashraf Ghani and top U.S. commanders for talks in Kabul. Mattis said today he believes victory in Afghanistan is still possible. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. It's just after 5:30 p.m. here in New York, 8:30 Wednesday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Well, New Zealand's been trading for about 30 minutes now. The NZX currently pointing down by about 0.1%. This is after all major indexes in the US declined on the news that Rex Tillerson is no longer the Secretary of State. And this is 1 week, of course, after the economic advisor Gary Cohn quit. Take a look at futures around the region. Futures on the ASX currently weaker by about 0.6%. Nikkei futures trading out of Chicago showing some strength, but futures trading out of Singapore are looking weaker. The Aussie dollar slightly weaker against the US, but still holding above 78.5 US cents, and the US dollar continuing to weaken against the Japanese yen. Let's get a quick check-in on commodities, and weakness seems to be the story of the day here as well. We've got gold, well, it was down a little last time I looked, showing a little bit of strength now. Crude oil off 0.8%. Iron ore futures not greatly changed. Keep an eye out for some data today. We've got industrial production and retail sales for February out of China, expected to show some slight contraction. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. Back to our top story. President Trump putting a halt to Broadcom's attempt at a hostile takeover of rival chipmaker Qualcomm. The president's message for Singaporean-based Broadcom was simple. This U.S. tech is not for sale to a foreign bidder, at least. National security aside, the timing of the president's announcement has raised some eyebrows because it was still being reviewed by the powerful Committee on Foreign Investment in the United States, which, under the Trump administration, has killed at least 9 takeover bids of U.S. companies by foreign firms. Here to help us get through the legal weeds, Tony Balloon, head of the China corporate consulting practice of Alston & Bird, and with me here in the studio, Matt Larson, who covers tech litigation for Bloomberg Intelligence. Tony, I want to start with you. You know, interesting. Ian King noted earlier that this is a company that is based in the United States but was domiciled in Singapore. So, you know, arguing that it is a foreign company, you know, maybe a little bit murky. We know that this was an unusual announcement for the president. What do you make of it?
Yeah, I think it's extraordinary in the sense that normally when you have CFIUS issues come up, the party acquiring control is domiciled or located in the country that's at issue from a national security perspective. And here it's sort of a disconnect, if you will, between the cited concerns about China and the actual buyer of or proposed buyer of Qualcomm.
Matt, talk to us about the extent of Broadcom's business in China.
Sure. So roughly half, about 49% of Broadcom's revenue comes from China. There's a lot of concern about...
So does Apple's revenue.
Yeah, so does
right?
Apple's revenue. So do a lot of international companies.
Maybe not 50%.
Maybe not 50%, but I think it also feeds into this 5G race. Is who's going to be the next to develop those technologies, and more importantly, where are those technologies going to reside in terms of ownership? And so, you know, this is almost as much of a U.S. protectionist decision on behalf of the Trump administration as it is about security concerns. Who's going to lead the way? Huawei, which is a huge player in China, has a lot of tech, a lot of leadership in 5G development, as does Qualcomm. And so I think the interest is kind of keeping those ownership holdings U.S. based and free from any kind of foreign influence or investment.
Tony, you know, what if Broadcom had waited until their full U.S. relocation was settled?
Yeah, I mean, I think that would be a little bit of a different scenario, but I still think that given the concerns over the race to win 5G technology, that I think there could have been a potential review there as well. I mean, we've seen CFIUS continue to creep and expand its jurisdiction and transactions that it thinks it has the ability to review, and I suspect this would end up firmly in their crosshairs even in that scenario.
Matt, you know, I asked Ian earlier. He doesn't know. You know, is Broadcom going to appeal? I mean, what is the legal case here?
You know, I would think that you could certainly appeal the executive order. The question is, are those dollars well spent on lawyers? Even if you appeal that successfully, what's going to go on with the CFIUS review? Is there too much legal overhang, and how much bang for your buck are you going to get? I think there are legal avenues that you could pursue. The question for Broadcom is going to be whether those are wise, whether they had great shareholder momentum going into this meeting until the CFIUS review came up, until now we have the executive order. It looks like the administration is going to do everything it can to try to thwart Broadcom's attempts. So maybe there's not as much appetite to stage the hostile takeover, and so, you know, no point in appealing. It's a little bit of a strategic decision, but it's looking bleak.
Tony, what happens now to the CFIUS review?
I mean, I think it continues sort of as it has as to other potential foreign acquirers of U.S. businesses and U.S. assets. I think with Broadcom specifically, I mean, there's really only been one suit in the history of the CFIUS process, and that also involved a Chinese-controlled enterprise that had purchased some wind farms that were too close to U.S. restricted airspace adjacent to a military base. And so I think it'll be interesting to see if Broadcom explores the courts, because that case, the Rawls case, actually settled. So there's really not a lot of definitive court rulings around what happens if you appeal. But in terms of the CFIUS process for other buyers going forward, I think, you know, we certainly have seen reticence from Chinese clients during the Trump administration to engage in the CFIUS process. I think this probably confirms their worst fears that certainly in the tech sector, there are going to be some significant headwinds for Chinese investors looking to acquire assets or access to technology in the U.S.
Talk to us about that. You know, what are the additional implications here for business from China?
I think it's going to be a challenge. You know, it's interesting because if you look historically, you know, notwithstanding all of the headline-grabbing blockages or busted transactions, you know, Chinese purchasers have actually had a 80 to 90% success rate going through the CFIUS process, but it tends to be in sectors outside of high tech and outside of semiconductors. And so I think you'll continue to see Chinese acquirers looking to do business and continue to grow their U.S. footprint, but I think they're going to end up having to pick their spots and figure out what makes the most sense and really think long and hard before pushing the high tech sector.
And Matt, when it comes to Qualcomm, you know, we know that they're engaged in lawsuits around the world, and Apple specifically. How is Qualcomm's case actually looking?
So, yeah, the shareholder perspective switches from is a Broadcom takeover imminent to what's going on with QTL, the Qualcomm Technology Licensing segment, which was previously about 1/3 of their revenue, 2/3 of their profitability. Can they get the dispute with Apple back on track? They've got 44 lawsuits globally across 8 different countries. We're going to start to see some decisions and key trial dates coming up. Likely China and Germany will be the first to weigh in the second quarter, maybe second half of this year. There's an ITC suit, the International Trade Commission here in the United States, that will begin trial in June. A decision is expected in September. So we'll start to see this dispute with Apple take shape, which could preview success in potential licensing discussions and resolving that feud and getting QTL back on track. So we'll have a sense of where everything is going kind of by the second half of this year. We think they've got a good case. It's going to take a lot of time.
All right, Matt Larson of Bloomberg Intelligence, thank you so much. And Tony Balloon, head of Chinese corporate consulting at Alston & Bird, thank you both for joining us. Well, Yahoo could be on the hook for punitive damages over a 2013 hack that exposed all 3 billion of its users. A U.S. district judge has ruled that victims of the data breach can seek damages because Yahoo executives did not do enough to protect consumers, given what they knew about the breach. Earlier this month, Yahoo reached an $80 million settlement with investors over executives concealing the hack to artificially inflate the price of Yahoo shares. Coming up, from ransomware to cryptocurrency hijacking, cybersecurity threats are still an enormous concern around the globe. We will hear from Chief Technology Officer at McAfee to talk about what trends the company sees across the threat landscape. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Chinese bike-sharing startup Ofo just raised $866 million in its latest funding round. And Chinese tech giant Alibaba is leading the financing. According to the company, this is the largest funding round raised by a bike-sharing company to date. The funding round will likely add to competition with Mobike, which was recently backed by Tencent. Together, Ofo and Mobike make up roughly 90% of the bike-sharing market in China. Well, in a new report, security firm McAfee highlights rising cyber threats from mobile and cryptocurrency hacks to ransomware. So what are the rising trends in cybersecurity and what should users be looking out for in 2018? For more, Steve Grobman, Chief Technology Officer at McAfee, joins us from Plano, Texas. So, Steve, first of all, let's talk about cryptocurrency hacking. Obviously, this coincided with the popularity around Bitcoin, with the price and rise of cryptocurrencies. What exactly is happening here?
That's right. So we need to recognize that cyber criminals are looking to optimize their profits. So as cryptocurrencies explode in price, cyber criminals are going to look to focus on how can they either steal cryptocurrencies or actually take over individuals' compute resources to mine new currencies, essentially be able to create cryptocurrency out of thin air as part of optimizing their business model.
So what's being done to address this?
So a lot of what we're focused on is looking for what is the underlying technology that the cyber criminals are using. So we're focused on looking at how do the applications that could take over a computer to perform the crypto mining actually work, detect that, and then prevent them from running, essentially giving our customers, along with the rest of the industry, focused on how do we stop the cyber criminals from going after this vector of attack.
Now, what about ransomware? Obviously, we've heard about an increase in ransomware attacks. You tracked, a 59% increase in ransomware attacks, including an acceleration towards the end of last year. Now that we know more about ransomware, how do we combat it?
All right, so the first thing to recognize is, from a cyber criminal's perspective, ransomware is a great crime, and part of the reason for that is they're paid directly by the victim. So unlike things like data theft, where a cyber criminal would need to then sell the stolen data in order to monetize it, ransomware is a very clean crime. So a lot of what we're doing in order to defend against ransomware is really understand all of the different types of attacks, either holding data for ransom or in corporate or healthcare environments, holding systems for ransom until a ransom of a much larger amount is ultimately paid.
Are companies simply paying these, hackers off? And is there any way to not pay once the attack has happened?
Yeah, it's a great question, and really the advice that we give is, if you can recover from a ransomware attack without paying, it's a far better process. So doing things like backing up your data so that if it's a data-based ransomware attack, you can simply recover and not pay the criminal. Or if some other system is held for ransom, being able to restore its service, it's a much better outcome. But we do recognize that companies are often put in very difficult situations where sometimes they do look at paying a ransom as one of the means to get back in business. And really every organization needs to make that decision on a case-by-case basis.
Healthcare, meantime, has become a new target for breaches. What trends are you seeing?
So we see really a diversification of breaches where cyber criminals are now using all sorts of techniques, and they're going after a much wider variety of targets. For example, in the healthcare industry, a report talked about a more than doubling of attacks against healthcare providers. And part of the reason for this is they're often running older systems, they're not using best practices, and the impact can be severe. We did one aspect of the study where we found things like medical images for patients were sometimes directly exposed on the internet. And in some cases, those images were using formats that included things like patient personal information. We've also seen things like the weaponization of data. The report talks about what we call face-click malware, where information warfare is attempting to abuse social media by making fictitious stories get lots of likes in order to grow their credibility.
And what are you seeing when it comes to the rise in malware? I mean, are we talking exponential? Will we see that plateau at some point?
You know, part of the challenge is the barrier to create new strains of malware has come way down. So we're seeing a much more rapid pace in bad actors building new forms of malware. In our report, we call out that every 8 pieces of malware are created every second, which is essentially a doubling of what we saw from our last report just a few months ago. So
why
it's
is that?
really
I mean, why
up
have
until
the barriers
this point.
why have the barriers come down as awareness about it has increased?
Well, part of it is that just as defense technology has continued to evolve, the technologies that bad actors use to build malware has also evolved. Take, for example, the ability to use technologies like artificial intelligence. We're using artificial intelligence in the cybersecurity defense industry in order to detect attacks, but similarly, bad actors are using the exact same technology to make their attacks more severe, or to identify victims, or to automate things that used to require human intervention.
All right. Well, a lot more fascinating stats that you guys have pulled in this new report. McAfee CTO Steve Grobman. Steve, thank you so much for stopping by.
Thanks.
Coming up, GM is aiming to do with cars what Airbnb has done with real estate. More on the automaker's car-sharing ambitions next. This is Bloomberg. GM is taking a page out of the home-sharing playbook. The automaker plans to start a pilot program this summer that will enable car owners to rent out their vehicles when they aren't using them. According to people familiar with the matter, they will list their cars on GM's Maven platform and share the revenue with the automaker. Joining us now with more detail, Bloomberg's Detroit bureau chief, David Welch. So, David, how exactly will this work?
So what will happen is GM will take cars that are owned by people they've sold them to. Could be a person who just bought a car brand new, or someone who's had it for a little while, offer them the chance in whatever cities they're going to launch this pilot program to put it on Maven's network. What Maven does right now is they rent cars out in the way that Zipcar does to people who just want them for a few hours, or they will rent them out for longer contracts to people who drive for Uber or Lyft or other delivery services. So they've already got this app that will connect people who need a car with GM's own network of them that are owned by Maven. Now, the owner of the car can put it on Maven's listing, and if they need it and they're nearby, someone who needs a car just taps the app and goes and picks it up and uses it for as long as it's available or as long as they need. And then GM and the owner would split the revenue in some way, and GM really hasn't been clear at all about how they would split that revenue up.
Now, you know, GM has been doing a lot of experimenting. They made a big investment in Lyft. They also have, you know, some sort of relationship with Uber through the Maven program. What does this signal about their strategy going forward towards partnerships versus GM really owning that relationship?
GM's doing all of the above right now. They do own a piece of Lyft, but then Lyft did go out and raise more money, and GM didn't participate. They have relationships with Uber, as you said, and that's non-financial. They just work basically, you know, renting cars to Uber drivers in certain cities. And they bought Cruise Automation, which is their self-driving car unit in San Francisco that's actually developing their autonomous vehicles. In this case, they're experimenting with it. GM wants to really be involved in everything you can imagine in terms of mobility. By working with Uber and Lyft, they're involved in ride hailing and ride sharing. By starting this app, they'll be in what's called peer-to-peer car sharing. Maven is already in regular car sharing. They're going to have robo-taxis next year through the Cruise Automation self-driving car unit. So they're really dabbling in everything to see what's going to work in terms of how people get around for the next decade and beyond.
What is the insurance risk that comes with this?
So GM hasn't really given any specifics. Frankly, we kind of got ahead of them on this one. But You look at Turo, which is one of the peer-to-peer car sharing companies that's out there. There are two. There's Turo and GetAround. And what Turo does is they've got a couple of insurance partners who insure the vehicles, even though they're owned by somebody out there who just listed it on Turo's site. It's insured by one of these Turo partners so that the owner of the car and the driver of the car, everything is covered while this rental situation is going on. This is basically a competitor to Avis or Hertz, really, and so they've got to have insurance in the same way that the carrier that those carriers would.
And quickly, do we expect other car makers to follow this trend? Tesla has hinted at peer-to-peer car sharing as well.
Yes, Elon Musk talked about it in 2016. He was talking about autonomous car sharing. And then some of GM's own competitors, Daimler, for example, is invested in Turo, who I mentioned before, and both Toyota and SAIC out of China have invested in GetAround. So some of the other players are dabbling in it. I think Tesla will probably get into it at some point, but right now GM's the one actually experimenting with it.
All right, Bloomberg's Detroit Bureau Chief David Welch. David, as always, thank you so much for joining us. And that does it for this edition of Bloomberg Technology. Reminder, we are live streaming on Twitter. Check us out at Technology, weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.